So this is actually going to be an update video. Very interestingly, I started this video a couple of months ago in the Advanced Market Structure series. Today's date is August 22nd, 2023. And it was around the 5th of July, the 6th of July, when I actually took the video originally. So it has been quite interesting to see this idea play out. I thought, you know what? I'm actually going to show an update video on how this actually played out, because the idea that we had, it worked. So let's actually observe how that played out. All right. So firstly, we were talking about this downwards trend here, which was a fractal structure drawing. We discussed that should we break this fractal structure drawing, we can look for a trade idea and we can take the trade up to this high. And if we break that high, we can therefore look to take it up to the black high over here, the black lower high. And if we break that black lower high, then we're probably coming for the main high of the range, so on and so forth, right? And that was our idea. Now, I mentioned that we would look for a long trade. If we get the structure break, we would get a retest, and then off we go. Look at this beautiful retest. We had this little demand range that was created from an internal standpoint. Price came right back for it. So price broke structure, not by a long shot, but it's definitely a break in structure. It therefore came down, and then it started to increase. You more than likely had a reconfirmation on the 1 minute time frame between this point and this point, right? You definitely could have found a reconfirmation there, but unfortunately I can't go back that far because it's too far back in time. So what happened to follow? Well, the high time frame idea, if I go back to the 2-hour time frame, the high time frame idea that we had was basically, if we were to break a certain high, then it made sense to come all the way up to this high. And that's what we were looking at, right? And if we broke this high, it made sense to come up to that high based on those two videos, and then to that high, so on and so forth. Now, of course, during the time that I recorded those videos, things can happen. That's why I always say we react, we don't predict. And if you lose your upwards trend, which we know counteracts a weak high, then obviously you have to start over again. And that's actually what occurred here. So if we cancel this replay, we can see what happened. So as you can see, that long that we were taking over here, it would have been stellar. I think it was like a 40-50% gain if you had taken the profit right here on the top. It was a really big, really profitable trade. So we had that play. It just didn't take us up as high as we wanted to. See, our idea was that if we broke structure here bullishly, this downward structure, then in theory, this high became weak in nature. But of course, I mentioned how it came into an area of demand down here. It could very well just flip its structure or reaccumulate from here. And that's exactly what happened. It produced a reaccumulation. Okay. So for those that went through the Wyckoff series or are about to go through the Wyckoff series at the end, that's exactly what happened here. You had a reaccumulation. This would be known as a Model 2. Okay. You could call this a miniature Model 1 accumulation. Then you had a reaccumulation Model 2, 1, 2, and 3. Right. So it was a really nice play nonetheless. And then ultimately, what we were looking at was on the daily time frame, right? The daily time frame, we were looking at targeting this high. And I mentioned that a realistic expectation would be this high, not so much this or here. I think that we do have the potential to take them all out. We'll see over time. But as a starting point, it made sense to see what happens once we get here. We haven't quite hit that high yet, but we're very, very close. So as you can see, it's playing out. The last time that we would have spoke, we were quite far away from there. We were actually, I believe, all the way down, right around here, when we talked about that, right? We were speaking about breaking this high with the close, and if we break this high with the close, then in theory, this one becomes weak. And if we break this high with the close, then the next one becomes weak, so on and so forth. But it looks like it wanted to reaccumulate. And why did it do that? Or why did it have to come back for this low? Well, you could argue the reason why it had to come back for that low is because you had multi-candle demand. You had a multi-candle demand zone that had to get mitigated first, right? If I can fix it, there we go. So we hit the multi-candle demand zone, whereas this left inducement on the zone. It didn't quite tap into the multi-candle demand. It just missed it ever so slightly. So maybe it had to come back one final time. But the true indication that this was going to occur, you didn't need to know Wyckoff for this. You don't need to know that this is demand either. You could have just based this on structure alone and watched your upward structure. There's no reason why you should have broke here from left to right. And of course, you can't see it on the daily, but on the 4-hour you can. So there's no reason why the 4-hour lower high should have broken the way it has right here. You had the initiation out, you had the mitigation and the continuation. Why should this have failed? It should not have failed. The fact that we came back for this low would have been the dead giveaway that we're coming back for this low, because therefore this became weak in nature, right? That shouldn't have happened, because what you're looking at there is you have a downwards trend. That downwards trend flipped to bullish. Let's hide the candles for a second here. So that downwards trend flipped to bullish, okay? Let's try to draw it a little bit cleaner. So we have down, we have up, and then we have down again. We're going to use a different color here, red. So if this is your swing lower low, this is your swing lower high, and this is your swing lower low, and this black drawing is your internal structure. This is what USD Canadian dollar actually conducted here. Look, it had this black internal structure drawing. So if this were to break bullishly like it has, and then you get the pullback into the demand range with another higher high, there's no reason to take this low again. It shouldn't take that low again. It shouldn't take that low again. Because what happens when it does? The second that you take a higher low out, even if it had to happen like 4 or 5 legs up before taking out this swing lower high, what happens here is that everything is reversed. This is no longer a weak lower high, right? We know that. It's no longer weak. Now this is weak. Okay? This is how accumulations start. So this was an interesting little addition to the course. I wasn't really planning on adding this video in. I thought it'd be cool to see how it actually is doing what we thought it would do. And it's playing out very nicely, coming up towards this targeted high, slowly but surely, right? So it is interesting to see this progress over the recording time of the course itself. So I'm adding this in as a little bonus. And I thought it would be nice to explain the follow through to people